My name is Peter Cuskelly. I'm Managing Director at Private Mortgages Australia, and I'll be taking you through our webinar today on how to increase broker revenue in 2023 with private lending. Now, Private Mortgages Australia was established in 2014 with a view to providing a transparent lending process to offer greater flexibility and quicker turnaround times to business customers who needed funding solutions that the banks either couldn't or wouldn't provide to meet their needs. So in today's session, we will be going through what are small business finance needs and how you can identify those within your current client list, how a private lender might be able to help, who a private lender can help, and I suppose the important part from a broker point of view, how you can increase revenue with private lending. And then we'll look at a simple solution for complex situations. So that's how we like to look at private lending. And we also look today at the PMA way, which is the way that our lending process. So just to kick it off, small business finance needs. So we've got a few statistics here. So around 30% of brokers' customers are small business owners. So these are traditionally the self-employed clients that you've got on your books already that usually will come to a broker because they're either very time poor or the banks don't quite understand what they're doing, and they need to find the right bank to meet their needs, even for a residential loan. So these are the sort of people that are already on your books, that you're already talking to and you're already helping. So you're already a trusted advisor to them. In a recent survey from Mambu, 50%. They found that 50% of SMEs can't access finance readily when they need it or when they want finance. So now that was just after the pandemic. So we expect that this is going to continue to be an issue for SMEs across the board. It's really with servicing and issues around past financials where they were impacted by COVID. The banks, as their flexibility isn't there, can create issues with getting finance for SMEs. There was also a survey by Scottish Pacific that found 39% of SMEs are looking to increase their borrowings in the next financial year. And that same survey also said that 25 of SMEs looked to non-bank lenders after the COVID stimulus ended. So a lot of the stats point to SMEs that are trying to either recover or grow after COVID, having trouble getting bank finance when and if they need it. So most of the SMEs that we see, they're looking for competitive interest rates, but more importantly, speed of access to funding and flexibility in repayment options. So they need funding sort of quickly and in a timely manner, but also that flexibility so that they're not stuck into a payment plan or a long-term commitment that they can't be sure that they afford, or in some terms they might also just need it for a short term that the banks aren't willing to look at. In terms of how a private lender can help, so one of the main things that we see is people will turn to us after they've been to a bank and their bank says no. So most SMEs will already have a bank relationship in one way or another, whether it's a home loan or a business banker. And we often find that they'll turn to a broker or directly to us after their own banker said no, and that's fair enough. Their existing banker relationship is always the first, should always probably be the first point of call. It's probably going to be, if the bank is prepared to do it, it will generally be quicker. So the main reason that we see that the banks say no is due to serviceability. So the clients might have a growth plan, or they might have an existing exit strategy, or they might have a new contract. There's 100 different reasons, and the banks will run the numbers based on their financial modelling, using historical financials, and then come up and decide whether the SME can service the loan or not. Now, that's not always going to be an accurate representation of how the SME is going to generate cash flow and how they're going to repay the loan. So that's where we can often help. Banks are also very strict on credit impaired customers. So if there is a default or even an ATO debt, those sort of loans will generally get rejected. And that's often where, particularly with ATO starting to chase their debts these days, we are able to assist clients to get their credit back on track, and then move to a more longer term relationship with their existing banker, a longer term loan. Private lender can also help with prepaid interest. So if the client or the business is, usually to come to a lender, they're a bit cash strapped. We'll also look at capitalising the interest from 3 months up to probably 12 months, and that way we can help them with no repayments for that period. At PMA, we also offer monthly extensions. So when the prepaid term finishes, we allow the client to make monthly payments. So it's monthly in advance. So that gives them that extra little bit of flexibility at the end of the prepaid term if the exit strategy or their plans haven't quite gone straight. PMA, we also offer a 4-hour guaranteed response time. So if you as a broker or one of our, or the referrer and one of our or direct clients have filled in our quick app form available on our website, we will guarantee to get back to you within 4 business hours, and that's Melbourne time for those of you in Perth or South Australia. So that quick app form gives us all the information we need to come back to you with a quote. We are also able to settle deals very quickly, so we can do settlement within five days, but that's 5 days of getting all the information that we need from the client. So that will often include a valuation. So, but if we have a very cooperative borrower and a broker that is able to source all the data for us, we can settle loans, and we have done loans within 5 days. So, who can private lenders help? So, as a private lender, PMA doesn't have a consumer credit license, so we are strictly able to lend for genuine business purposes. So we can help business owners, property investors, property developers. We can look at construction funding as well. So we do quite a lot of deals around property construction funding. One of the main reasons that we do get asked to fund is that the banks are even still saying yes, but just not timely enough. So we recently did a loan where borrower came to us with a credit contract that was in rescission in Victoria. He had 14 days to settle or he was going to lose his deposit. So the bank was still saying that yes, they will fund it, but they hadn't actually come up with the final approval at that time. So we were able to get in there, use the bank valuation and fund the loan before the rescission period expired. So one of the big benefits of private lending is that you've got, there's no serviceability calculations or predetermined criteria. We don't do credit scoring and all those things. So each deal is looked at on its merits and each borrower is considered based on all the information that we have available. So we are willing to look at credit impaired borrowers that banks wouldn't, as well as borrowers that have had cash flow issues in the past. As I said, we also look at businesses with ATO debts. We can pay them out to get everything back on track with the ATO and get them back in a position where they can borrow from the banks. One of the other things that we at PMA look at is that we'll base our loan on valuation, not the contract price. So over the years, we've often seen people that have essentially got a bargain and looked at borrowing based on what the property's worth at the time of settlement and not the contract price. So whether that's a long-term settlement on a contract and the property value's gone up, or they've even added value to the property with getting a DA, we'll look at the value of the property at the time of settlement. And we can also look at borrowers paying out business partners. That's quite a common scenario. But as you'd imagine, with business borrowers, there are a myriad of loan purposes that we get to look at, as well as the general one. So there's, it can be a cash flow or a business opportunity. So we've looked at business purchases or buying stock at a discounted price, or just buying stock to meet a new contract that's been obtained. So there's a lot of reasons that you can use a private lender and that a private lender can assist. So now I'd like to talk about how you actually go and apply these situations and help increase your revenue with private lending. So most brokers will be focused on mortgage loans and their clients and how they can help them achieve their home loans and achieve savings across the myriad of mortgage products that are out there. So I suppose what we're looking for is for you to, if you can try and identify some of your clients that are self-employed, so your SME clients that are business owners or contractors in their own right, so the ones that need a little bit more love and care when they're looking for banking products. So these guys are also business owners. So we found from surveys that have been done by other banks that about 30% of broker clients are self-employed, have at least some form of self-employed income. So from your client base, if it's around the average, you will have around 30% of your clients that can, I suppose, have a business loan and can or may have a use for private lending coming forward. So private lending is really about understanding your client's needs. So for most of you, with looking for your existing clients and trying to help them get home loans, you've got their financials, you understand what they need. If you've got them a home loan, great. That's probably should be your first port of call. But if you understand what your client wants and what they're looking for, then you can might be able to identify a need where private lending can help. Now, again, as I said earlier, it's only going to be in the cases where the banks can't help. So if you've got a client that has been struggling to find funds, you understand what they need the money for. If it's for business purpose and the banks won't help, whether it's by home loan or a business loan, then it might be something that private lending can assist with. So most small business owners will look to you as their broker to come up with solutions to try and help them. So most of them probably won't have even heard of private lending. So it really is a great opportunity for you to help them and give them a solution that they wouldn't generally understand or wouldn't know that it even existed in a lot of cases. So the best way to start is to, I suppose, look at that they make them aware of that, but you also need to understand their needs and goals. What are they trying to achieve? Is it for a genuine business purpose? If it is, then that might be something that you can help. Again, there's a lot of, you don't have to invest a great amount of time in this. At PMA particularly, we deal both via brokers and directly with borrowers. So if you do have a borrower that is looking for funds, you can't find them via the bank, but you don't have the time to go looking for private lending solutions or go through all the different options that are available out there in the private lending market. We're always happy to even get just a direct phone number and a name. We'll still pay full commissions on just a straightforward referral, and it often makes it quite useful that we can talk directly with the borrower and sort out if we're able to help, we can sort of come up with a solution very quickly for them. So yeah, we still pay. If you've got a mandate, we'll still pay the mandate fee at settlement and the referrer fee. And I suppose one of the other good things about private lending too is that at the end of our short-term loan, the borrower will often require a refinance if their exit strategy isn't to sell the asset, but is refinance. There's also the opportunity, as you've helped them secure the private loan, that they'll also get you to secure the refinance in due course. So how do we come up with this magic figure of increasing your revenue by a certain amount? And we've come up with the increasing your revenue by 60%. So what we've done is taken some figures from a range of surveys that have been done. So the average broker revenue from a survey done by Monarch Institute was $100,000. Now, if we assume that you have 120 clients on your database, 30% of those are SME. So you've got about 36 clients that are running their own business or have contractor or self-employed income. So you've got, on an average basis, you could be higher or lower. You've got about 36 clients that are going to be in the possible situation of requiring private lending. Now, if we assume that, say, only 10% of these have an immediate finance scenario during any given year, so that gives us, let's say, three clients per year. Okay. Now, our average loan size is $1 million. It's not to say it. So we'll do anything from 100,000 up to 5 million, but just based on averages, for average clients looking for around $1 million. that will give you $3 million in loan value that you can refer to us. Now, if you have a mandate fee, and we always recommend that you do get a mandate from your client just to stop them shopping around as well. So if you have a mandate fee of 1% plus 1% referral fee, that gives us $20,000 per client that each time that they draw down a loan. So based on what we've just said, that'll give you $20,000 or $10,000 mandate fee and $10,000 referral fee. So in the end of the day, you'll get $60,000 across those 3 loans each year. So the recommendation we're making, or suggestion we're making, is that you go out to all your SME clients, let them know that you've got a relationship with a private lender who might be able to help if they're looking for funds and either can't or don't expect that the banks will be able to help them. So it's quite a valuable tool. I suppose one of the key things too is there's no clawbacks with particularly PMA private loans. So it's a good opportunity just to, I suppose, drive your revenue stream and just diversify, whilst also helping out your clients and getting solutions for them. So some of the sort of our key, I suppose, products or lending solutions that PMA provide. So we split these into 2 groups, so business solutions and property solutions. So it depends on the structure of the client's business or where they want to do. So in terms of business solutions, we're usually looking at sort of bridging or working capital. So this is just to help clients who have either an opportunity or sometimes a problem. Now, whether it's ATO, chasing tax debt, but we'll get to that as a separate one. But just needing some funds for their business. So they've got an opportunity to buy out a lot of stock from a competitor that's shutting down. They're buying out, even down to needing to pay staff wages or things like that. So it can be either growth or just to get back on track. We do find a lot of times, and again, we talk about refinance down the track, but a lot of times it can be part of that, can be a refinance of some unsecured debt, or even just reimbursing directors for funds that they've put back into the business that they need to get out for other purposes. So, to the second one, business purchase or establishment. Again, it's quite a straightforward one. We do see a little bit of this where we've got a client that is asset rich, so they've sold a business, or they've got some funds from somewhere. They've paid off their home loan, own their homes outright, but want some money to buy a business. Now, banks generally don't look at that because they haven't got the track record. A lot of times it'll be where the company's establishing a business as well. So without a track record, if you're creating a new business, there's a lot of added value, you create goodwill, but the banks won't look at funding it. So we'll fund those costs against a property to help them establish the business. And then once they've got the track record in place, that can be refinanced out. Business equipment purchase is, I suppose, similar to what we're talking about. A lot of brokers will have relationships with asset finance specialists. However, we do find that whilst that is a good option for a lot of people, a lot of times they won't fund 100% of the purchase, or it's actually quite expensive compared to a secured mortgage loan. So we can sometimes fund business equipment a lot cheaper, a lot quicker than an asset finance. And again, it depends, if it's a second-hand equipment, such as a bulldozer, a lot of asset finance lenders wouldn't look at one that we did recently. So that can work. Equity release is a strong one. I touched on it before with the under working capital. This can be where a business or company just requires equity release, so can be for, as I said before, payback directors' loans, can be for a new investment. A lot of lenders, private lending, we can look at lending against an existing asset to assist the purchase of another property or another asset, which gives the equity into that one. So that's quite a common scenario. Refinance and debt consolidation. This is probably one of the most common loan purposes that we see day in, day out, where we look at providing a loan to either consolidated debt, whether it's a combination of unsecured debts, existing bank debt, whether it's another private lender that either doesn't want to or can't continue a loan, or there can be a myriad of reasons where it makes sense to consolidate debt. So that's a common scenario. And we'll, as I mentioned before, we'll also look at ATO debt. So with the ATO now back chasing debt quite aggressively, that's sometimes a good choice to clear ATO debt, as I said again, and then refinance that loan once the ATO debt's done with a first or second tier lender to bring it back into a long-term scenario. But most banks won't touch refinancing ATO debt, so it's always a good option to use. In terms of property solutions, obviously land and property finance, so purchase finance is probably our most common. We'll also fund land subdivision, so that's in situations where the DA's been approved and they're looking for construction funding to put in all the works to get the titles issued for the new subdivision. Renovation and flip is something we've had a lot of over the last few years, where purchase property, do some generally relatively minor renovations or a little bit of construction sometimes, and then flip the property and take the profit. We do development and construction, again on the smaller side, the smaller scale, with a maximum lend of sort of 3 million to that size. It's probably sort of more the 2 or 3 pack sort of lending or construction properties. Construction completion is an interesting one, so we're finding a little bit of this comes up relatively often, and we're probably expecting more of it across the board at the moment, where a client has commenced construction and is largely most of the way through it, but has a shortfall either due to variations in fixed price contract, or if they're an owner builder, just due to increased costs. So if there's sufficient equity there in the NV, we'll look again at construction, at funding that completion on a second mortgage basis. Although we have done on a first mortgage basis as well if they own the property outright. Mezzanine finance, so we'll look at putting the money in upfront to help contribute towards the equity position of against I suppose a first mortgage against a bank. And the other one is residual stock, where a construction funding has been done. The apartments or townhouses or whatever it is have all been titled. The pre-sales are all sold out, and the construction lender wants their money back. We can look at doing a loan just to pay off the residual stock until those remaining properties or lots are finally sold. So in terms of PMA's products, or to PMA's pricing, so we have interest rates for a first mortgage from 7.95% per annum. Now that rate is generally something that from a private mortgage perspective would be a very prime interest rate. So that would be a very low LVR property in sort of Melbourne, Sydney, Brisbane, in a key suburb there. So most of our loans will have a margin added onto that. Again, we assess every loan and price it based on the risk or perceived risk that we assess. So most, as with business lending and banks, there's a margin that's added to that across the different loans. So it's based on a range of different options, including LVRs and the loan term. We'll look at loan amounts from 100,000 up to 5 million. As I said before, our average loan is around $1 million, but we're very happy to have a look at anything from 100 to 5 mil. Our minimum loan term is 3 months. We mentioned before that we have a prepaid term, so that 3 months is our minimum prepaid term. We will look at loans out to 36 months, usually with a maximum prepaid term of 12 months, but again, it's case by case, depends on the cash flow that's there. We will look at first or second mortgages. Sometimes we'll look at a combination of both across an existing product with a bank mortgage. So just to top up to get the available funds that are needed to achieve what they want to achieve. And we have loan to value ratios up to 75%. 75%. We will look at up to 65% for construction properties. So, but for a completed security residential property, 75% is our maximum LVR. The lending process. So our lending process is, we think, quite smooth. Again, the term will depend on how quickly we receive all the information. We can turn a loan around within 5 business days or 7 days, but that is from receipt of all the information. So with a good broker and having a good client behind you with providing all the information that is needed quickly, we have quite a good turnaround process. So it all starts by submitting the online quick app. That's through the portal on our website. It contains all the information we need to do our initial assessment. So from that, it feeds into our pricing tool, our assessment tool, and we can then proceed to produce an indicative letter of offer. Now, we do have a guarantee that we will provide a 4-hour turnaround, so we'll contact you within 4 business hours That's Melbourne business hours of receiving the quick app, and get back to you on that. So indicative letter of offer comes with an indicative rate and the assessment fee and pretty much all the costs and fees that will be involved in our should the loan proceed to settlement. So there's no charging clause in PMA's indicative letter of offer. It really is just an understanding of, based on the information we have, this is what we'll provide. And we're very proud of the fact that from those indicative offers, unless something changes or there's quite an extensive change in time. So if interest rates go up, the RBA makes a couple of announcements, then yes, we might change the rate. But generally speaking, in most, well over 90% of the cases, the indicative rate is the rate that we put out in the final offer. So, we don't like surprises, and we don't sort of change our, we don't sort of try and, entrap clients. We'll keep that rate unless something drastically changes, like the property value doesn't stack up and the LVR is totally different. So once you've presented the offer to the client, we get them to sign it. As I said, there's no charging clauses. We do ask for an $1,100 fee to cover our costs of due diligence. So once we get the offer back and the assessment fee, we'll commence our due diligence. So at this point, we will do a credit check. Not to say that we're too worried about anything in a credit check, just that we do ask that you be honest with us up front so that we can, we're not surprised by anything that comes in there. So our due diligence process, we like to think, is quite thorough. It may or may not need evaluation depending on the nature of the security property that we've got. So we do have a range of valuation processes that we can use. So once we've finished our due diligence, our loan is approved. So we have an independent credit committee that sits on our fund. So it's an in-house approval. We're not relying on sending out offers to various lenders. It is all funded in-house. We then we'll issue our letter of offer, and if that's accepted by the client, we'll then get our solicitors prepare the mortgage document, send them off to solicitors via email, and then once they're returned, we can proceed to settlement. So that's a snapshot of our lending process. As I said, it can be done as quick as 7 days, as long as we've got a good broker and a good client. Okay, so now I'd like to take you through some case studies that we've done recently with some of our borrowers, just so we can, I suppose, give an example of how we can help and what sort of solutions we can provide. The first one is a restaurant purchase. Now, this one was done for a couple of experienced restaurant operators. At the time, they owned their house outright, or had a small debt, on their loan, and wanted to buy a restaurant outside of Melbourne, sort of in the I suppose Melbourne's outer east. Quite a nice restaurant, mainly based on a pizza base. They couldn't get bank finance. Their financials were out of date. They were going into a new business, so their main bank considered a startup, so they were not able to get any funding in that. So
it was, I suppose, a good situation for a private finance. So the scenario was that they would borrow against their residential property, again located in the outer Melbourne suburb of Belgrave, outer east, and yeah, look to establishing the business, grow it. With their experience in the industry, they did change it up a little bit. Had quite a good customer following, and then once they got their financials done, and established the business, they could refinance out. So for the start of the loan, the security property was valued at 620,000. The first mortgage, including the 6 months of prepaid interest, was 250. So giving us LVR just over 40%. We did that an interest rate of 7.5% per annum. And as I said, term 6 months prepaid. Plus, I suppose one of the things that PMA always provides is we'll always give some monthly extensions where you can pay 1 month's interest in advance just to extend the facility, because we're aware that there's a lot of situations where exit strategies don't always come in on time. So we like to give a little bit of breathing space that is already pre-approved with the loan, so it saves everything going to default and creating issues. So that one worked out very well. It was actually repaid not all that long ago, so it's been quite a good loan for everyone, and quite good pizzas if you're ever up around the end of the Puff and Billy play line. So it's quite a good scenario for us. Another case study that for a deal that we looked at, this one was a little bit different. It was a refinance and providing some working capital for some borrowers down in Tasmania, around the Hobart area. They purchased some land and constructed a warehouse and storage facility on it. So we were looking to, the loan purpose was to refinance the existing loan they had there and provide some working capital for their business. So they couldn't get bank finance at the time. Their financials didn't support any further borrowing. They did have other loans regarding other business assets around, but like many businesses, they were impacted during COVID, and they did sign a lease sort of right in the middle of COVID down in Hobart, which was quite significantly under market rentals. So that hindered both the valuation of the commercial property and just their ability to raise funds and cash flow. So quite probably a common story of how COVID's impacted many sort of SMEs, whether they're property related or just a normal business SME. There's going to be a lot of financials around at the moment, similar to these guys, that don't reflect their normal or what would be a normal business year. So with this loan, the exit is again to refinance, or they were going to try and to repay the debt from trading cash flow. With this one, this is at the upper end of the prepaid terms that we can look at. So this one was actually 24 months prepaid, which is probably above the 12 months that we prefer. But the 24 months prepaid gets them to the end of the first lease term. So it made sense for us and for them to have that length of prepaid term. and to help them achieve that exit strategy. So they'll be able to build up cash flow from other business activities, or then once that lease term is extended, they'll be the lease term is expired, they'll be able to increase the terms back to a market rental, and that should give them both the cash flow and the valuation to refinance quite easily back to a first or second tier bank. So again, quite a good scenario from I suppose everybody's point of view. So in terms of PMA's fees and charges, we have an approval fee, which is run on a sliding scale based on the loan amount. So it varies from 3.5% for 100,000 all the way up to 1.5 for up to 5 million. Now from that, we will pay a referrer fee anywhere between sort of 1 to 0.5%. Again on a sliding scale as per that slide. So those fees are locked in as part of our approval fee. We collect them at settlement. They're paid out usually 24 hours after settlement, and yeah, there's, as we said before, there's no clawbacks. So a couple of other points. There's no cost until your client accepts our indicative letter of offer. We don't charge to do an initial assessment or anything like that. We do charge the assessment fee of $1,000 plus GST. That's to cover our due diligence process in terms of time, and also the out-of-pocket title searches, credit checks, etc. that we do as part of that process. As I mentioned before, we don't always require a valuation, but if we do, then we will arrange quotes with our panel valuers, and we can we'll ask that to be paid at the cost of the valuer charges us. We don't make add any margin to it or anything like that. They're just charged at cost if we do need it. A service fee, so this is similar to what we called a mandate fee previously. So there can be 1% plus GST added on to the loan. Again, this is collected at settlement. Difference between the service fee and the referrer fee. The service fee is disclosed in our indicative offer as an extra fee. So always good to have that agreed up front in a mandate. If it is construction or completion, we'll also, if we do require a QS, those fees are charged at cost if it's required. Legal fees, so legal fees to prepare documents are around the 3,300 to 4,400, again depending on complexity. If there's 10 properties and 10 searches and everything else, 10 mortgages, that can go up a little bit, but that's the basis. So for a single property, just a single mortgage, 3,300 usually covers it. And our referral fees, we like to say that we're channel agnostic. So we charge the same approval fee whether it comes from a broker or the loan comes in direct. So it for a client, they don't get a cheaper approval fee just if there's no referrer. Usually because we prefer to have a broker involved. It just makes everybody's life a bit easier. With brokers providing all the information, usually have everything to hand and understand our market a little bit better. So, speaking of that, just in terms of working with referrers, 90% of our business does come from referrers, and most of those are brokers. So we use the term referrers because we do get some referral business from accountants, some from solicitors. But most of the referral business is from mortgage brokers. As I mentioned before, if you don't have time, we are happy to do all the work, liaise with the borrower directly, and just take basically just take a referral from you. But we do pay the full commission or fees directly, whether regardless of how much involvement you've had in the process. As I said before, referral fee paid on settlement. There are no callbacks, so that client, those fees are yours. We also pay a subsequent referral fee. So we do have situations where a client may come back to us directly. So if a client had a loan, we do get a lot of repeat clients. They'll come back to us for another loan, sometimes through the broker. But if they do come back directly and we do write the loan, we still pay the full referral fee back to the broker. I've made a call a couple of times. It's actually one of the better phone calls I get to make, to ring up a broker and ask them for an invoice because we've just had another loan for their client. And as we said, one of the benefits of using a short-term loan to help a client achieve a solution to a problem or a opportunity is that the exit, if it's a referral, if it's refinance, the referrer, a broker, does get to handle the refinance. So there's often a chance to get some more fee income and provide a longer term solution for the client. So one of the things that we look at as part of an initial assessment, and this is probably something that you can do as brokers, as to whether to understand if a deal is going to fit a private lending situation or particularly a PMA situation. These are the initial checklist for our consideration. So firstly is the loan non-coded. If the loan's coded or appears to be coded, we'll knock it out quickly. Is the client going to accept interest rates above that 7.95% per annum? There's a little asterisk there that says that excludes the management fee. So above the interest rate, there is a management fee of 2.2% for first mortgages or 3.3% for second mortgages. So, you need to make sure that the borrowers are comfortable that they need it. The solution, is required, and the interest rate is sort of something that just sits in the background. But as long as they get the solution, they'll be happy. Postcode and LVR, property. We're not going to do 75% LVR on every property. We could also put in the security type as well. For a rural property, LVRs might be as low as 50%. For a farm, but again, we'll go up to 75% for a property, a residential property in a metropolitan area. Exit strategy is probably the most critical part of the loan, the whole loan assessment. If you are going to do refinance for your client, we would ask that you've considered where you're going to go for the refinance, who's going to approve it, and have a bit of a think about how you're going to achieve that. It is critical for your broker-client relationship, just to make sure that you're not putting them in a loan which they can't can't get out of. So that's always an important part of it. Also ask why you can't get back finance. We see a lot of loans where clients come back and say that, from an indicative letter of offer, and say, I'm not going to take that. I've got an offer from, ANZ at a cheaper rate. We're not trying to compete with ANZ. We offer a very different product and solution package. So if you can get your client bank finance, you really should. That should be your first port of call. And also the other thing is, when do you need to settle? As I said, we can do settlements within 5 business days with a sort of a good broker and a good client. But it is something, if you can let us know up front when settlement's due, we can manage that process a lot better for you. The PMA way, what we look at, we have low upfront assessment fees, no charging clause in the indicative letter of offer, and there's no cancellation fees in the indicative letter of offer either. Valuations are done at cost and done at a reasonable value. So we don't look at a for sale value or anything like that. We look at market value. Legal fees are at cost. Our solicitor issues an invoice for all those separately to the client. I did mention before the extension payment. So any unused interest on extension payments is rebated at settlement when the loan's repaid at full. We have our own custom-built software for fast deal processing and assessment time frame, so that lets us do things nice and quick. And we have a high level of repeat customers, so a lot of our customers do come back and to reborrow for either separate projects or different things that happen once they're aware of us. It seems they can find different needs, so it's always good to hear back from existing clients or past clients. And we have a win-win approach to lending. So we won't do a loan where it doesn't make sense to us. We like to understand why the client's doing what they're doing, why they need the finance, and that it makes sense for the client to take out a private loan. So that's the way that we like to approach it. If you do have a scenario, there's our contact details of Shanta Lobo, who's our General Manager Relationships. So Shanta is based in Melbourne. She's our main initial contact for all scenarios, all inquiries. The other choice is that you can put in a quick app. The link is on our website. The website address is there. So that's the main part for contacting. So thank you for listening. Hope you've enjoyed the webinar. If you do have questions, follow-ups, you can contact Shanta or myself to discuss. You will also be issued with a CPD certificate sent via email that you use to register the webinar with. So again, thank you for listening, and I hope you've enjoyed the webinar and got something out of it.